Ladies and gentlemen, we have officially survived FOMC Day. We still have quite a bit of financial events to get through this week, but for the most part, we did see the Fed hold rates. Now, we're going to talk about that. We're going to address it. Now, does this affect the markets in a very negative way? Well, number one, I do think that for the most part, markets have kind of priced in the idea of the Fed just kind of holding. I think that it would have been a shocker if he actually did cut rates today, but we knew that it wasn't going to happen. For the last couple, days or so, I've been saying that we're not going to see a rate cut in July. I've actually been saying it since like roughly the beginning of July, simply because of the CME group prediction as well is like less than 5%. So we knew it wasn't going to happen, but September is definitely a big focus. Now I'm going to talk about that. I'm going to address that as well. But the main question here is, did Jerome Powell really just break XRP and the crypto market and even HBAR? Well, let's take a quick look at a few things. Number one, on the daily, Bitcoin barely green, 0.1%, Ethereum 0.9%. On the weekly, Ethereum still looking pretty good. Bitcoin still hovering around 118K, Ethereum still hovering around 3,800, and of course, XRP still around like the $3.13 region. Nothing crazy at all. And ultimately, if we look at the market, most of the market is still red. Every single exchange red, except for like Coinbase, 0.48%. And then, 100 all the way through the top 1,000, there's practically zero gains here. There's only a few outliers here. And, like I said, for the most part, everything is just, it's just a red day. It's a red day. Markets were, kind of just shuffling around a bit. We did see a few liquidations as well. Here we have wrecked in the past 24 hours, 146,519 traders were liquidated with $421 million in total losses. The largest, well, one Ethereum long for $5.44 million was wiped out completely. Liquidations spiked after Powell said it's too soon to flag a September rate cut, triggering a sharp pullback in risk assets. And yeah, this is because, of course, he did say that it's too soon to say for certain if we're going to see a September rate cut as well. Now, I personally see a September rate cut happening. I'll talk about why here in a moment, but this is how the market has kind of bounced back. You guys can even see it in terms of like the crypto market cap, just for reference. Let's go to the 30-day. I wish that it was kind of showing us a little bit of the recovery, but it's kind of hard to see it on this chart, but you guys can kind of see the spike today, right? Regardless of that, sentiment is still pretty bullish, around 62 for greed in terms of fear and greed. But most of the market has just been kind of cooling off today. The gains and the losses are really kind of flat. There wasn't like a crazy loss today at all in terms of like the top 100. We could see it in the last 24 hours. I mean, some of these gains are like 6% losses in terms of like the actual losses. In terms of gains, it's about like 9% for the most. So again, just kind of a boring day in the market regardless. It's been pretty calm, nothing too crazy. So that's good to say the least, because again, typically FOMC meetings, volatility is typically crazy. This is what the daily looks like for Bitcoin. We did wick down to like 116K. So, I mean, earlier today it was kind of crazy, but since then we've kind of bounced back and just kind of hovered around like the 118K level. With XRP on the daily, we did wick down to like $3.02. With HBAR, if we go to HBAR on the daily, we wicked down to about roughly like 25 cents or so. It wasn't, again, like the losses today, even the spikes to the upside and the downside were nothing crazy. But we have over here from Trump. President Trump is absolutely scorching the Federal Reserve and Jerome Powell right now, slams him for costing the U.S. $365 billion per year per point of interest. I call him too late. Even if he does it, cut rates today, probably won't until September. For what reason, nobody knows. Each point that this gentleman keeps up cost us $365 billion a year. Think about that. The good news is we're doing better than everybody in the world, even with the higher rates. And you guys can check it out here.
We should be lowering the rates. Each point that this gentleman keeps up costs us $365 billion a year. Think of that. 1 point, $365 billion. If you bring it down a point, we save 365. We should be the lowest interest rate, and we're not. We're 38, number 38, because of the Fed. It's all because of the Fed. He's done a bad job. Now he's got a meeting today, but I call him too late. You know, he's always too late. Even if he does it today, probably won't. I hear they're going to do it in September, not today. For what reason? Nobody knows. But Europe, as you know, cut their rates 11 times in the last short period of time. But the good news is we're doing better than anybody anywhere in the world. Nobody's doing anything even close to us, even with the higher rates. The higher rates do affect housing, though, because people can't go out and get a loan or refinance their house. And it would be nice to have them be able to do that. That would be just another check of a box. That would be very important. Yeah, please.
Mr. President, you
So yeah, I mean, listen, this is exactly why, you know, everyone thought that Jerome Powell was going to cut rates. Everyone thought that, oh, Trump's backing him into a corner. And then you have BlackRock coming out and saying that the Fed should also cut rates. We knew that they weren't going to do it in July. It doesn't really matter what Trump is saying here because, again, Jerome Powell, he's not going to listen. He's not going to get bullied into cutting rates. But I will say this, September should be the focus. Even right now from CME Group, 43.2% chance of an ease in September. I think that as we do get closer to September, because we're still, you know, a full month and a half out from the September meeting, you know, as we get closer, I think that the odds for a September rate cut are going to surge. I think that we're kind of following the same 2024 schedule here where we're going to see a cut in September, October, and December. The only difference here was in 2024, we got the rate cut in November instead of October, but there's no meeting in November this time around. So main focus here, September and October. In October, there's a 63.8% chance of an ease. December, it's still a little bit early, but you know, they're saying 86.4% of a chance of an ease. So, you know, we are at 42.1%, 63.8%, and then 86.4%. I think that we see a rate cut in all of these months. So 3 cuts to end the year off. Is it going to be 1 basis point? Well, we would have to see. That would be huge for the markets. That would be 3% right off the rip for the interest rates. I think that we're at like 6.5, so it would be back to about like 3.5, which at that point, retail looks at it as free money because, again, 3.5% interest on, you know, loans. It could be, you know, going out, getting a mortgage, car loans, anything, you know, 3.5%. That's extremely affordable. And a lot of people look at it as free money. So we would see markets flooding these markets. We would see money, you know, immediately, you know, cause a surge in real estate, in stocks, in crypto. So this is why we have been focused on what the Fed does next. Now, the big thing today is the dollar, because again, with this news, it caused a lot of people to look at the dollar, and the dollar has been surging in the last week. I mean, this thing is up significantly, and we're at the first major sign of, you know, strength for the dollar to really kind of regain a lot of momentum here. I'm watching for us to reject this 99.83 level. I would love for us to reject this and start to revisit the lows yet again down here at like 97. That would be huge for risk on assets. It would provide a lot more steam for risk on assets. This is what the daily looks like. It looks as though we're starting to fight a little bit of resistance around this level, and that's exactly what we want to see. We want to see a sell-off from here. We don't want to see the dollar gain a lot of strength at this time. So we're definitely watching the dollar closely here throughout, you know, the rest of this week and then even into next week as well. But this should definitely be the focus. And the Fed did cause this to skyrocket because, again, once you hear those words about, oh, we don't know about a rate cut in September, all of a sudden risk on assets don't look that, you know, strong. So that's where money starts to kind of leave these markets. That's where money kind of starts to go back into like the dollar. People look at like money market funds, for an example, things like that, that just kind of safer bets. Outside of the dollar, the S&P 500, again, I said in my live stream, I'm not expecting this anymore. I don't think that we see that surge to 6,500 first. I think that we probably see that sell off initially, and then we'll start to kind of climb back to the upside. So, you know, scratch this idea off. We probably target, you know, 62, like 50 or so first, and then we start to see that nice upward swing on the S&P. You know, we should probably see a nice little boring week going forward. I think that would be good for the markets to kind of cool off a little bit more, and then we get that nice move. But for the most part, you know, I'm not expecting anything too crazy going forward just yet until we start to really see us get closer to that September date. And when I say that, I mean probably for like the first half of August, you know, we kind of just stay a little steady, calm markets, nothing too crazy. We consolidate a little bit longer, and then the second half of August we go crazy again. Right now, stocks in terms of like the futures, they don't look too bad. They're still pretty bullish. So we could see that the markets have not they haven't been shaken at all from what the Fed has done. I think everyone was kind of expecting this. I mean, even Trump said, he's probably not going to cut it. So, it was pretty much expected. Outside of that, Bitcoin right now, the reason why I say, the first half of August is probably going to be boring is that we're, ranging here for 17 days. We ranged back here after having that nice impulse move to the upside in May. It took us, 49 days officially to break out of those highs. We retested the highs on July 9th here on the daily. Currently, if we are going to range for 48 days, well, 48 days would actually take us a little bit deeper into like the end of August, which is why I'm not expecting that we, range that long. We've already been in it in 17 days. If we do half of that, like 24 days, that would pretty much be like the first half or like the beginning of August. I would like to meet in the middle, say for like 32 days officially. That would take us to August 15th. Then the rest of August, we pretty much pump. We pump into September 17th, aka the FOMC meeting, and the markets should be roaring around that time. And then the FOMC meeting, the Fed rate cut decision will help us really kind of surge markets even higher if and when we get that rate cut, which, September should be the focus. But with Bitcoin, the main thing here is that I'm looking at two levels. The two levels are 117K and 120K. Whenever we get a daily candle close above or below those levels, that's when you should really prepare for, some pretty significant price action. So mainly just watching, these two levels on Bitcoin. It's been pretty boring. Ethereum is in the same situation. And then in terms of XRP and HBAR, price action going forward. So XRP, we have been ranging here on the daily since that high back in the middle of July. Again, very similar state to Bitcoin, where we're just kind of ranging for 13 days. I still think that we probably range a little bit longer here, build a floor above $2.96. This is the level to actually watch for on XRP, because if we do lose this $2.96 level, we should probably target the previous highs. And this would be about like $2.62, maybe even like $2.72. Anywhere within this range down here is basically the focus on XRP if we start to, lose some of these significant lows that we have been so far holding on to. So I'm definitely watching XRP closely here if we do see that negative reaction on Bitcoin. If we see the positive reaction, well then, XRP should start to really kind of bottom here and get that nice upward push back to $3.49, $3.50. We'll just round it up, which would allow us to retest resistance and potentially have that breakout to break above $3.66 and on its way to $4 plus. Outside of XRP, with HBAR, we are in that red zone still. We've been fighting it for quite some time. There's still a possibility that we do retest like 17.5 cents to like 20 cents. And I know a lot of people are not going to like that because, again, this would be a pretty large drop on HBAR. It's like a 23% to like 30-some% drop. I'm not saying that we are going to look at that level as being like a guarantee or anything like that. It's just a probability with, Bitcoin having a potential, run up to like 119K once again, and then getting that big drop back down to like 112K, which would be like a 6.6% drop. Some of these altcoins would get hurt a little bit more. The main thing here with HBAR is just holding on to like those 24-cent lows. You could argue it's like around 23 cents because it's just like XRP. Is there a lot to really kind of look at around 23 cents? Not so much on the 3-day. On the daily, if we look at the daily around this level, again, there's not really a lot of support around this level. The main thing is finding support and actually closing right around like 24 cents, which if we look at the 3-day real quick, again, this is right around the previous highs going back here in March. We closed on this once. There's a lot of resistance back here in February that we were actually trading against this level. So we technically formed support on resistance, which is why I would like for us to actually maintain these lows. But there's always a possibility of an exaggerated drop where we do lose these lows. We start to create lower lows on the chart, which would cause an exaggerated drop into like this demand zone down here. I'm not saying that we, you know, hit this. We could easily avoid it and invalidate that level being targeted on HBAR if we really start to break above some of these highs. But the main focus here is what Bitcoin's going to do next. The reaction with stocks, and then also the dollar. The dollar is the main focus from my point of view, because this is telling us that we should be bullish or bearish on risk on assets. When this thing is strong, that means that risk on assets are typically weak, and vice versa. So with that being said, did the Fed break the markets? Well, I think that they definitely caused a little bit of concern today. I think that, you know, everyone in the risk on asset class right now that's investing into stocks or crypto, I think that they're watching this and they're listening to what, you know, Jerome Powell is saying about, you know, hey, guess what? You know, we don't want to, you know, it might be too early to cut in September. I think that they're hearing that and they're probably getting a little bit fearful about what's going to happen next. So I think that they caused quite a bit of concern. They liquidated. I mean, it caused a lot of liquidations today. But did they officially break the markets? I think that it's too early to call that right now. We still have to wait for the September rate cut decision, and then we can really kind of have that decision. But right now, I'm not too concerned at all. I think that we get a rate cut in September, October, and December to end off the year, and that will cause markets to surge even higher. So with that being said, I hope that you guys enjoyed this video. If you guys definitely will like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, Nick, thanks for watching. Peace out.